Buenos dias, amigos. Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency market update with yours truly. We have a lot to get into, as always, ladies and gentlemen. We're going to be starting off with some news from the US government that is now dumping Bitcoin once again. The US government are actually one of the largest holders through the confiscation of Bitcoin in various schemes or scams or whatever it is. But they are now sending, I believe it was quite a large amount of Bitcoin over to Coinbase. So they are dumping, I mean, who isn't at this point selling Bitcoin? We've got the German government, we've got Mt. Gox allegedly, and of course the US government. Bring it on, ladies and gentlemen. I think it's largely going to be a nothing burger, but we're going to cover it all the same. Then we're going to be diving over to a tweet from Stuart Aldaughtery, who essentially is the chief legal officer over at Ripple, pointing out that the SEC and Gary Gensler himself have been slammed once more for unlawful behavior. We will be taking a look at that. I wasn't really in the camp that they were going to get rid of Gensler. Now I think they will. And certainly if somebody like Trump or RFK gets elected, he's gone, because he has been nothing short of hostile and complete and utterly failed to protect investors. In fact, the only people that are beneficiaries of the Terra Luna situation is the SEC, who are essentially, I think they're getting something like a $2 billion payout. Not the people that got scammed or that lost money. I'm not convinced. I think Luna was just a project that went wrong. Okay? I'm not 100% convinced it was a deliberate scam. I'm really going to rustle some feathers by saying that. However, a lot of people got hurt, and it's really sad and unfortunate. And ultimately, the SEC did nothing to protect people there, nothing to protect people with FTX. They were rubbing shoulders with Sam Bankman-Fried. We're then going to be talking about some stocks, and we're going to be revisiting our Amazon chart. So we have a price prediction of $261 for Amazon. We gave that price prediction when it was in the sort of lower 100s, so 100, and I think we were looking at the right shoulder forming at 119. Today it's at nearly 200, so that would have been a great gain. It's broken out into new all-time highs, and we think it's going to $261. Now, this is a crypto channel, so we understand that for crypto to do well, the broader environment has to be a supportive one. Now, this largely anchors around the dollar. If you guys haven't already checked out the Patreon, there's a link in the description. Click it, decide whether it's for you or not. It's a reasonable fee, a reasonable monthly fee, but for the information that you get, you know, I believe it's well and truly worth it. And actually, we've really been focusing on the dollar, the drivers of the dollar, and the fundamental reasons to why the Dixie is going to come down, which is going to see risk do well. And it has everything to do with rate cuts that are coming for the US. Now, there's been a kind of uncertainty that's plaguing the markets at the moment, but a lot of them are sort of grinding higher during this uncertainty. Crypto not so much being the highest beta, and it's actually pulling back against its pairs. And this is why we're bringing up Amazon, because we're going to look at Bitcoin against Amazon, which has broken out. It's come back for a retest in a typical fashion and is likely going to go higher. So wherever we look at the cryptocurrency space from a technical point of view, there's a bullish picture being painted, whether that's some of the miners that we look at, whether that's some of the crypto index stocks that we look at, whether that's individual altcoins, whether that's Bitcoin, whether that's Total 2. And then when you add this kind of view that we have of where things are going on the macro and how that's pivotal around the dollar, and we need to see the dollar roll, which I think is going to come on the back end of interest rates, because why did the dollar gain strength against other currencies when all other currencies were raising interest rates to the same degree as the Fed? Well, it's because the demand for the dollar debt markets is far greater than the others. So when interest rates get rose, there's a sort of more of an effect there, and when they get cut, there's more of an effect. So this is why I think the Dixie, which aligns with the sort of channel and coming to the lower band of it, or the lower trend line that we've been in since 2008. We'll talk about it all in the video. Then we're going to be talking about Tom Lee's prediction for the S&P to $1,500, or sorry, $15,000. I think the S&P, what's going to happen for markets, this is what I envision. And I agree with David Hunter on this. I think he got 2022 wrong when we were out the market, but I think generally his view on things are going to be right. There is going to be the mother of all crashes coming. I do believe that. But I think the markets are going to do spectacularly into that. It's going to be a joyous time, and then they're going to crash it on somebody like, I don't know, Trump or something like that. Just my own personal take, but we'll kind of leave that to the door. We're also seeing a record £21 billion in BOE short-term repo operations. So banks are looking for liquidity here, and it's being borrowed at a higher rate. at what point does QT become QE in the sense that the debt markets that you have need financing, and you've now upped the interest rate, which means you need to essentially print more money, increase the monetary supply to basically pay that off, which is kind of, if inflation is driven by the monetary supply, and I believe it is, and you can get that from looking at assets against it. And yes, there are other variables, of course. We're not saying that's the sole thing, but it's the big driver. It's the main driver. Banks or central banks are certainly going to want to cut, probably more so than anybody, because of the size of their debt. It's far greater than someone that's got a mortgage that's paying something like 5.25%, or if it's on I think variable rates at some banks are 8-7%, something like that. They will be coming down. We did tell you that story about us having that argument with a mortgage broker who was trying to get everyone to fix their rates right now for 2-3 years, and I'm saying, why would you do that when rates are coming down? He said, well, they're not. And I'm saying, well, I don't know where you're getting your information from. But then we'll be looking at the dollar. A lot to get into. We've outlined a lot of it already. Let's start things off with the US government news. So the US government sends 3,940 Bitcoin to Coinbase's exchange. So data from Arkham Intelligence indicates the Bitcoin was seized from Bammeet Singh, a convicted drug dealer, during his January 2024 trial. So they are going to be selling this. You can see this is the actual moving of the Bitcoin. This is going to be a consistent contender that the crypto space is going to have to deal with, and that is the US government offloading their Bitcoin. I don't think necessarily they're going to want to hold it, although they've held the vast majority of it. But I think they're going to continue to sell Bitcoin, essentially. Don't worry about this. I don't think it's really much to worry about. Let's move on to a little bit of SEC news. This is obviously from Stuart, Chief Legal Officer over at Ripple. Another court slams the SEC, this time for unlawfully rescinding a rule on proxy advisory firms without adhering to the Administrative Procedure Act. The court explains that Gensler personally directed this illegal move, National Associations of Manufacturers versus the SEC. So the 2020 rule never went into effect. The SEC rescinded it in November 2021, a month before proxy firms were required to comply with the notice and awareness conditions. The rescission process began shortly after the new SEC chair defendant, so he's the one on trial here, Gary Gensler, took office in June 2021. Chairman Gensler directed his staff to reconsider the 2020 rule and suspended its enforcement in the meantime. Chair Gary Gensler's statement on the application of the proxy rule to proxy voting advice. The SEC on 2021 essentially took the rule back in regards to appliance, but still tried to persecute someone as a result of it. So I actually think they're going to get Gensler out at this point. I think it's interesting that we saw the chief legal officer or the head of enforcement for crypto from the SEC step down. We've seen a number of individuals get sort of promoted or pushed towards resigning or getting fired in regards to crypto cases. Certainly Debtbox was one. He has really held the dam in regards to the wall of money that's going to flow into the cryptocurrency space, and there's cracks. The pressure is building up on the one side. It will be taken. And the beautiful thing is you guys are all speculators on the cryptocurrency space before it's even been allowed to become one. Remember, crypto is risky. There's no guarantees. Moving on. So this is an interesting topic because it talks about Amazon's $2 trillion market cap and the kind of move that we're seeing. And the interesting, so Amazon's market capitalization surpassed $2 trillion for the first time on Wednesday, joining the ranks of the tech giants like Apple and Microsoft. We've done a lot of work on Amazon, and we got laughed at, like we do with all the price predictions that we give. And the vast majority, if you look at what we were calling for the stock market in 2023 when we got back into the market, so we can show you so many targets that got hit. Some of them are still on their way to it, and they've progressed beautifully, just like what we're seeing here with Amazon. So Amazon, we believe, is going to $261. We'll be sure to tell you when it gets there. And it's progressed. And we were looking at it down here. We got absolutely killed because people were saying, oh, well, Jeff Bezos selling, so should you. And this is what happens when you follow news headlines and don't have a sort of technical understanding of the charts. There is a newsletter in the description. We are releasing courses on how anybody can not only understand the charts from a technical point of view in regards to breaking them down into 4 phases, but then actually go and, with a degree of accuracy, be able to predict what's coming next for a chart. And at the end of the sort of course, you'll be able to do that, and you'll sort of test your skills out with the quiz that we have for you. But Amazon broken out into new all-time highs. It's going above and beyond, in our opinion. And why are we showing you this? Why is this all relevant? Well, we know crypto doesn't escape the macroeconomic environment. Markets move in cycles, ladies and gentlemen. We are now in an upward cycle for the crypto space generally, I think. We'll look at Turtle 2 in just a second. But you have Bitcoin against Amazon, which had broken out. This is a very kind of Bitcoin-esque, if you remember what it did in the 20 sort of K range, retest or double retest, that ultimately we think, this is going to double. Bitcoin is going to double in relation to Amazon, which I think is going to be going up anyway. It paints a bullish picture. Also, when you look at charts, I looked at this yesterday, I believe, with you guys. Or who did I look at this with? It may have been on Patreon. I looked at Sol BTC chart. Solana looks really bullish against Bitcoin, and some of you may hate Solana. That's fine. Leave your biases at the door when it comes to investing. But what I'm highlighting here is the fact that if Solana is bullish against Bitcoin, that means the overall space has got to be doing well. And it's just one chart that we can derive a little bit of a bullish narrative out of, coupled with all the other things that we look at, like Bitcoin against Amazon. Bitcoin's not going to do well against Amazon in an environment that generally isn't good for risk. We've stated all the sort of underlying reasons why we think this is the case, as well as technical. We're still waiting for Total 2 to play out and get to that $3.8 trillion. We have higher targets on Bitcoin. We have higher targets on all of our crypto basket indexes that actually last week were some of the things. They saw $100 million in inflows. Now, that doesn't sound like a lot of money, but it's significant. Certainly when you're given the volume that Ethereum saw. Bitcoin saw significantly more volume. So hang in there. From a technical point of view, we believe we've got this right, of course. There was a video of Tom Lee talking about how he believes the S&P can get to $1,500 or $15,000 by 2030. I'm not convinced. I think the crash probably is going to come before that. But certainly we were looking, just like we're looking at Amazon, we were looking at the S&P down here. It's done quite well. And is it going to sort of 3x from here? And what's crypto going to do in that environment? It's a nice take, but is it a probable one? I'm not 100% convinced. I think that's too far into the future for me. I want to talk about bank borrowing right now. So banks borrow record £21 billion in BOE short-term repo operations. This is interesting. This is significant because it's showing banks are liquidity starved right now, and it's likely because of the sort of debt burdens that they have. If we look at unrealized losses for banks in the United States, and UK is a smaller kind of indicator, it's at record highs, and there's this hole that is going to need to be plugged, and I think that comes in the form of liquidity, which aligns with liquidity cycles, PMI cycles, and of course where we think Bitcoin and everything else is going. It's just a question of waiting for that dollar to take a position, and our position is we're going to see that downside. We haven't been in the second wave of inflation is here, just like the 1970s, because we think there's a different context to the markets at this point. And we haven't been in the interest rates are going higher. We're in the camp that interest rates are going lower. That's going to ultimately drive, you're going to see that in the yields first. That's ultimately going to drive, where's the Fed funds? The Dixie to the downside, and we know the correlation between the Dixie and risk. And I can show you this with a BLX, and we're just waiting for this short-term direction to be taken for the dollar. My bet is that it comes to the downside. We are going to have inflationary data tomorrow in the form of PCEs. So that is something that I'm looking forward to seeing, or at least I believe it's tomorrow. Where are we? USD, yeah, core PCEs. I think this is going to roll. And I think that's ultimately going to see the dollar gain a little bit of weakness or see a little bit of weakness, and the sort of risk markets do quite well out of it. And we had some poor housing stats from yesterday. It's all about the dollar rolling, guys. And it always has been. I say always. There always has been this element. If we look at the halving cycles, we're in a very normal position. In fact, we're a bit ahead of schedule, if you will. There is a correlation with the halving cycles, and if you look at the bull markets and the real sort of aggression of them, they're always on the dollar coming down. I think the dollar is going to come down. That's what's going to see this take place. So I have probably rambled on for way too long, as I always do. Lots of things to sort of cover, lots of things to stay up to date with. Ignore the US government dumping Bitcoin. That's going to be a consistent trend that we're going to see and have to contend with. Understand technically where the markets are at and get that view from a number of different perspectives. So we look at ETPs, we look at individual cryptos, we look at the stock market, we compare the stock market with Bitcoin. When we walks, talks, and quacks like a duck, ladies and gents, it is a duck. You're having some hoisin sauce, duck pancakes from the Chinese for dinner, which I'm not sure is that an American thing. I don't think, is that an American? In the UK, you know what we're like in the UK. We like to import our favorite foods. And I'm not sure hoisin duck pancakes are a thing over in America. Well, you should try them. They are lovely. So that is it from me, ladies and gents. Stick to the course. The dam is breaking in regards to the regulatory barrier that's been put in place by Gensler. And I do believe that's going to lead to a good time for the markets. Could I be wrong? Absolutely. Nothing is guaranteed. There's no silver bullets when it comes to markets. What there is having the ability to critically think about them and apply them and hopefully make money or admit when you're wrong on them. That's the game. That's it from me, ladies and gents. I thoroughly enjoyed presenting this video. I hope you enjoyed watching it. On that note, I'm going to love and leave you. See you all in the next one.